Point England has just set a record nobody wanted, a 33% crash from peak. That's $482,000 in lost value for the median homeowner, the biggest dollar loss of any suburb in Auckland. If you own property in East Auckland, or you've been watching the market thinking Point England might be a buying opportunity, this is the story you need to understand. Because what's happened here isn't just bad, it's historic. We're talking about a suburb that peaked at $1.46 million in December 2021 and crashed to $978,000 by August 2024. That's a third of the value just gone. Now, I've been tracking Auckland's property market closely, and I knew things were rough. Auckland overall is down about 20 to 22% from peak. Wellington's been hammered too. But when I pulled the latest data on Point England, I had to double-check the numbers. Because this isn't just the worst performing suburb in Auckland right now, it's one of the most dramatic suburban crashes we've seen in modern New Zealand history. And here's what makes this particularly concerning. Point England has recovered slightly since that August 2024 trough. It's now sitting at around $1.017 million, up about 4% from the bottom. But even with that recovery, it's still more than $443,000 below its peak value, still down over 30%. That's not a correction, that's a fundamental repricing of an entire community. So if you're in East Auckland, Point England, Glen Innes, Panmure, any of the surrounding suburbs, or if you're an investor who bought during the boom, or you're considering buying now because prices have fallen so much, you need to understand exactly what's driven this crash. Because the forces behind Point England's collapse tell us something important about Auckland's property market, about which suburbs are most vulnerable, and about what happens when development expectations meet economic reality. Now, Auckland Mayor Wayne Brown acknowledged back in May 2025 that consumer confidence has collapsed. The city's doing it tough. Rates are going up. He's proposed increases to cover the city rail link costs. The economy's been weak, but even in that context, Point England stands out. This is an extreme outcome, and we need to understand why it happened here more than anywhere else in Auckland. So in this video, we're going to break down exactly what happened in Point England. We'll look at the numbers, peak to trough to present. We'll dig into why this particular suburb experienced Auckland's worst crash. And we'll tackle the big question, is this the bottom? Or should people in Point England and surrounding East Auckland suburbs brace for more pain? 3 key things we're covering. First, the full scale of Point England's crash with all the data points. Second, the specific factors that made this suburb so vulnerable, because this didn't happen by accident. And third, what this means for anyone with money tied up in East Auckland properties or anyone considering buying in 2026. Let's get into it. Right, so let's start with the raw data, because the numbers here are genuinely shocking. Point England peaked at a median value of $1.46 million in December 2021. That was the absolute top of the market. Then it crashed. By August 2024, the median had fallen to $978,000. That's a 33% decline. In dollar terms, that's $482,000 wiped out. The biggest dollar loss of any suburb in Auckland. To put that in perspective, if you bought the median home in Point England at the peak with a 20% deposit, you put down $292,000. Your mortgage was $1,168,000. By August 2024, your home was worth $978,000, meaning you owed nearly $200,000 more than the property was worth. You were underwater. Now, there has been a recovery. Since that August 2024 trough, Point England has bounced back about 4%. The current median sits around $1.017 million. That's progress, sure. But it's still 30.7% below the peak. Still more than $443,000 off the high. For anyone who bought in late 2021 or early 2022, they're still sitting on massive paper losses. And when you look at the annual growth rate over the past 2 years, Point England has been declining at 8.54% per year. That's not a one-time shock. That's sustained, grinding depreciation year after year. So once again, the obvious question is, why Point England? Why did this suburb crash harder than anywhere else in Auckland? There are several forces at play here, and they all converged in Point England in a particularly brutal way. First, the area's history. Point England was historically a state housing area. Over time, as Auckland's property market boomed, developers saw opportunity. The suburb sits on high-value land close to the city, close to employment centres, with good transport links. So there was a wave of development, knocking down old state houses, building new townhouses and units, trying to densify the area and capture that land value. That development wave meant a lot of new supply hitting the market just as broader Auckland was turning. And here's the thing about new supply in a falling market. It amplifies the decline. Buyers have choice. They can be picky. They wait for better deals, so prices fall faster. Second, the affordability profile. Point England was never the most expensive suburb in Auckland, but during the boom, it got pulled up dramatically. $1.46 million is a lot of money. For a lot of Kiwi families, that's a stretch even with low interest rates. When rates shot up from 2.5% to over 6%, the servicing costs became impossible for many buyers. The pool of people who could afford Point England shrank dramatically. Third, the economic composition of the area. East Auckland suburbs like Point England tend to have a higher proportion of families in working-class jobs. Trades, transport, retail, healthcare. These sectors have been hit hard over the past 2 years. When GDP contracted 0.9% in the June 2025 quarter, when unemployment started rising, it hit these areas harder than, say, the North Shore, where you have more white-collar professionals with more job security. Fourth, and this is crucial, investor activity. During the boom, a lot of the buying in Point England was from investors. People saw the development potential, the gentrification narrative, the idea that this was an up-and-coming area. They bought off-plan units and townhouses. But when the market turned, those investors got caught. They couldn't sell without taking losses. Some had to sell anyway. That distressed selling accelerated the decline. When you look at other East Auckland suburbs, Point England's crash is an outlier even within its own region. Highland Park, for instance, is only 13.4% below peak and has actually recovered 8.3% from its low. That's still a significant fall, but it's nowhere near Point England's 33%. So there's something specific about Point England that made it more vulnerable. Let's talk about what this crash means for people living through it. If you bought at the peak, you've watched $482,000 of equity disappear. That's your financial security, your retirement plan, the deposit you needed to move. For first home buyers who stretched in 2021 to 2022, young families who saved for years, they're stuck in homes worth far less than they paid, with mortgages that got harder to service when rates shot up. The psychological toll is real. You see neighbors in the same situation. For sale signs that stay up for months, price reductions that don't attract buyers. There's a sense of being trapped. Can't sell without massive losses. Can't move forward with no equity. Now, zoom out to Auckland's broader picture. The city's crashed 19.7% to 22.9% from January 2022 peak, 31% in inflation-adjusted terms. Worst performance of any major New Zealand centre. Within Auckland, North Shore down 18.4%, Central down approximately 20%, South Auckland down 22 to 23%. Then Point England at 33%, on another level entirely. Mayor Wayne Brown acknowledged back in May 2025. Consumer confidence has collapsed. He's proposing rates increases for City Rail link costs, $235 million annually. For Point England homeowners with mortgage stress and falling values, more rates pressure compounds the pain. So the critical question, is this the bottom? Should Point England homeowners expect more pain, or is the recovery underway? Here's my honest assessment. I think Point England has probably seen the worst of the decline. The 33% crash from peak to trough, that was the capitulation phase. The 4% recovery since August 2024 suggests we've found some level of support. Buyers are starting to come back in, seeing value at these levels. But, and this is important, I don't think we're going to see a quick V-shaped recovery back to 2021 peak values. That $1.46 million peak was inflated by a perfect storm of factors that aren't coming back anytime soon. Ultra-low interest rates, FOMO buying, constrained supply, massive investor demand. Those conditions are gone. What I think is more likely is a slow, grinding recovery. Maybe 3 to 5% annual growth over the next couple of years, if economic conditions improve. That would get Point England back to around $1.1 to $1.15 million by late 2026 or early 2027. But even that scenario leaves homeowners who bought at the peak still significantly underwater. The Reserve Bank has cut rates aggressively, from 5.5% down to 2.25%. That's 325 basis points of easing. Mortgage rates are falling. First home buyers are back in the market nationally. Those are all positive signs. But Point England faces some headwinds that other suburbs don't. The oversupply issue is real. There are a lot of units and townhouses in Point England and surrounding East Auckland that were built during the boom and are still on the market or being rented out by investors who can't sell. Until that inventory gets absorbed, it's going to cap price growth. The economic composition matters too. If unemployment keeps rising, if blue-collar jobs remain under pressure, that's going to limit the pool of buyers who can afford even the current $1 million median. And there's the stigma effect. Point England now has a reputation as Auckland's worst-performing suburb. That perception takes time to shift. Buyers remember the 33% crash. They'll be cautious about jumping in, worried they might catch a further fall. All right, let's wrap this up. Point England has experienced a record-breaking 33% crash from peak, with the median value falling from $1.46 million in December 2021 to $978,000 by August 2024, a $482,000 loss, the largest in Auckland. Even after a 4% recovery, values remain more than $443,000 below peak, still down over 30%. This crash was driven by a convergence of factors: oversupply from development boom, affordability limits as interest rates soared, economic vulnerability in working-class sectors, distressed investor selling, and Point England's specific characteristics as a former state housing area undergoing gentrification. Looking ahead, Point England has likely seen the worst, but recovery will be slow. A return to peak values could take 5 to 10 years, if it happens at all. For current homeowners, the financial and psychological toll is significant. For potential buyers, there may be value at current levels, but risks remain around further inventory absorption and economic conditions. And here's the broader lesson from Point England. In a market downturn, the suburbs that rose fastest often fall hardest. Areas undergoing rapid development and gentrification, areas that attracted heavy investor activity, areas dependent on cheap credit, these are the most vulnerable when conditions reverse. Auckland's property market is going through its most significant correction in modern history. Point England is the extreme case, but the dynamics that drove its crash are present, to varying degrees, across much of Auckland and New Zealand. If this analysis helped you understand what's really happening in East Auckland, hit that subscribe button and turn on notifications. We're tracking this market suburb by suburb. Drop a comment if you're in Point England or East Auckland. I want to hear what you're experiencing on the ground. And share this with anyone who needs this information. New Zealand's property market is being fundamentally repriced. Point England's story is a stark reminder of what happens when boom turns to bust. Thanks for watching. I'll see you in the next report.